Is this thing working? MCK, McKesson, New York Stock Exchange. And look at that beautiful stage 2. It had the mother of all stage 2s. It is a beauty. All right, when did this little beast start? Look at that mountain. Wow, this has been going on up forever. All right, here we go. 2010, stage 2, stage 3, stage 2, stage 3, stage 2. Look how the cloud has a price action always closing above the cloud, the final line. Working very well as good support. Stage 2, stage 3, and where's my volume? Let's move up the time frame. Oh, okay, here we are. Okay. So what I'm looking for is that big green candle that's twice the average volume of the previous 4 weeks, 4 to 5 weeks. And because I know it's one of my criterias, I'm also looking for RSI going over the halfway point. And that's how I could rapidly isolate the start of a stage 2. And also there's a horizontal trend line with that candle that's going to bust on top. But there were multiple. This is like a... See, it doesn't have very much like on the quadruple volume. Let's just zoom in a little bit. There we go. Let's say we're here. And I have this candle right here. Oh, I don't want line. Add arrow right here, this one. And where's the corresponding volume? So is this candle right here twice the average volume of the previous 4? Not really. That's what's hard. Just about. And what about the RSI? It was already over 50, over the halfway point, going into positive territory, so that's good. Because of the volume, could have considered that not an A+ setup. But as a launching pattern, this was pretty nice. Contracted on small volume and then pulled away back. Look at that, man. Okay, let's just zoom. Right here. And price action went up, went down. Move your sell stop below the pullback once the price goes back up and below round number. So maybe here at the 104.95 for traders, investors right here. And henceforth, price action goes up, goes back down. You see on the not so much volume compared to the, when it pushes, you want the green candles being higher and the red candles being lower on the pullbacks. That gives you a good indication that it's a nice stage 2. It's an A+, and it has momentum to keep going up. Right here, see, it pushes hard on that hard green candle. After that, contracting volume on the pullback, and here's the pullback. Traders, investors, sell stops. Price action goes up. I look at the RSI there. If ever you get confused, you see the RSI price action goes back down and up, and then you know that could have been the low. Here, move it up, and even this one here, maybe price action goes up, pulls down. I keep saying it. Stan says you need corrections under 7%. They don't You should not take that into account as a valid correction. He's not wrong. There's fluctuations, and then there's like real corrections. And he put that 7%. Maybe I could look into the ATR there, average true range. So get maybe some stats, try to figure that out, and use that indicator per stock. Know its volatility at that moment or that wherever it is, and use that to establish what's a correction and what's just movement. And there you go. Look at that stage 2. It just keeps popping up. Right here. Price action goes up, pull back, and uncontracting volume, and then explodes. At this stage, you could have, once you could start drawing a trend line that's more aggressive than you see this trend line, 1, 2, 3, it's kind of useless because it goes under 30-week moving average. You already have the 30-week moving average that's going to signal your exit. What you're looking for is more aggressive trend line. And 1, 2, 3, and that was not bad. But now the price action decided to go even more aggressive, farther away, pulling that 30-week moving average up. So now you need an even more aggressive trend line. 1, 2, not yet. 1, maybe here. There you go. 1. I'm counting the 1, maybe 2, 3, 4, and then the break here. And you could have sold here at the close of the week. Or if you didn't want to tolerate the wick going through that trend line, you could have sold immediately. And especially if there's higher volume, you don't want to be there. If the volume's picking up on those red candles, on the pullbacks, not a good sign. So imagine that you started here, all the way here. So the rule is traders and investors have the position when you break the trend line, and the other half position either when you hit a previous sell stop, or when you do the final breach of the 30-week moving average. And what happened here is, where would have been my final sell stop? Let me go back. Price action goes up, up, up. No pullback yet. So right now, okay, you'd have half your position, and you still have traders and investors. You still have half your position right here. Look, I'm not even looking at continuation buys. There's probably here when the price action starts getting close to the 30-week moving average. That means the price action has pulled away and has decided to go sideways, and then you reach that 30 moving average. Every one of these hits you have here on the 30-week moving average, it's the breakout candle is a good move, a good place to add continuations. So if you would have been strategic and been following every week and really being on point with your trade, with your position on MCK, and that's why you shouldn't have more maybe than 10 open positions, unless like you have secretaries or some people help you, because you really need to have your mind focused, really analyze, make sure you have the triple confirmation. And you see here you had a continuation buy in stage 2. Here also, look at that. Here's so all these are all 1% risks you could have added every time moved up, because you're moving up. The sell stop has also moved, and now the previous position you're in has become a 0 risk trade, and then that liberates the risk. And then after that, you could on this one also, price action goes up, and then you would have moved up your sell stop, and instead of just having 1% of your NAV at risk, Now you have 1, 2, 3% of your NAV as a position size, but you still have just 1% risk. And that is the ultimate way. That's how you want it. Let me put it right. Yeah, it's this candle here. Candle here. And there's a whole bunch. There's another one here. Price action starts going sideways. Didn't quite reach the... Even another one right here. So a lot of this candle right here. A lot of opportunities to add on. That's why this is like just a perfect Stan Weinstein stage 2 explosion. And then it really picks up right here. So all of these positions, take half of your... cut that in half. So let's say you had 1% position, 2, 3, 4%. Here you'd cut half those positions in half, and then you could either start adding more, but it's always a warning sign when the trend line is violated. So remember that. Here you could have fallen in love with the stock. Again, don't fall in love. You don't know what's going to happen next. Even here, 30-week moving average getting touched, not a good sign. Yes, it did bounce up. Let's just see. Did we have a volume on this breakout candle? Not really. The volume was right a little bit before. Check it out. I think. Which candle? See, it's this candle right here that... Not super convincing, the volume. Whoa. Stop moving. Right here. It's that small candle here. Or maybe it was these candles here. The breakout candles. This one here. Okay. I'm not looking at the good one. So this one had a good volume. Maybe 30% more than the average of the previous, or even more, 60-70% more than previous average of the 4 or 5 weeks. And you could have added some even more, and then you were close to the 3-week moving average going up. Did you have the RSI going in upwards territory? Most likely did. Right there. McKesson, MCK. All right, and then keeps going up. Do we have a trend line? So this trend line has been called off. This bottom. 1, 2, maybe 3 here, 4. And a couple of places you could have moved your sell stop along the way. Well, this candle here would have removed your position right there. So here's a sell stop. Here's another one. Right, and they're here for traders, investors. Remember that. And that long candle, I don't know what happened on that day, whatever reason. You got to trigger it out right here. So the final move. There's half of your position taken out here. And let's see the final half. Right there, around the 190 for the traders, and a little lower for the investors, right below the 30-week moving average, 185. So that's pretty good for your risk. How much was your risk? Oh, let me zoom back. Okay, here it is. Here's where you get greedy or you don't. The original size of everything, you would have started right here, and your sell stop for investors would have been here. So from height to bottom, whatever value that is. You buy the size that you need for that to equal 1% of your NAV, no more. And for traders, you could have put your sell stop right under 30-week moving average, under round number, and you'd have a little bigger size, maybe twice the size that equals 1% of your risk. Since you can only lose that much compared to investors, which is that much, from the bottom here to there, the percentage size could have been almost twice as much. And that's for your initial position. After that, every time you would have got in here, let's say you got here at this candle, sell stop for traders, right under that pattern for traders, 4 to 6% under that breakout line. And if you're not sure, put it the same place as a trader below. Investors, don't get greedy. Get that protection of that classical chart pattern, and get the protection if you can under round number and under the 30-week moving average. That is sell stop considerations. Always consider those three, and if you do, that means you're not getting greedy, and you always have chances to add on position to size on strong stage twos. There's no reason to I'm going to put my sell stop right under that candle. It's not going to go back. Well, it could whipsaw, and you'll get close to it. So the whipsaw action, usually it's above 30-week moving average. It's above below bottoms of chart patterns. Sometimes there could be a wick that penetrates the previous resistance, the resistance line, the breakout line. Don't lose sleep over that, guys. And here we go with the stage two, and it kept going and going and going and going and going. Oh my God. Wow. Beast. It's just a beast. And you could have drawn multiple trend lines over time. 1, 2, 3, 4. And for the final exit, right here, half of your position, traders, investors, or whatever is remaining from after this trend line exit. And that's it, man. You're out. And what happened after that? And that's the beauty of Stan's system. You're out real fast. Stage 3, sometimes they don't last very long. And the stage 3 seemed to have came about really fast. Went through the cloud like butter. Bounced back close to the 30-week moving average. And then bottomed down for the beginning of stage 1. And that's where I think we are. No, kept going. See, right cloud resistance. If you're above the green cloud, you're in an uptrend, and that's your support. And if you're below a red cloud, you're in a downtrend. And look how it resisted perfectly. And that's that resistance that was created before, projected in the future, 26 periods. That's why I never play breakouts that are below. So let's say I'm here, I'm above 30-week moving average, I have a chart pattern, I have a breakout candle. Okay, now it didn't have the volume, but imagine it would have had the volume, or even this one here. Okay, let's go here, because it has a volume. Right here, you could have said, this is my breakout candle, above 30-week moving average, above a classical chart pattern. I had the volume right here, twice the average of the previous 4 or 5 weeks, and I'm from halfway point going to positive territory on the other side. Triple confirmation, A+ setup, but now there's the A++ setup, and that's, are you on the good side of the Ichimoku cloud? And the answer is no. Pat, I don't care. I got a Stan, he didn't have Ichimoku clouds. Well, maybe Stan would have get whipsawed less, and the system is just a little bit better, I think, with this Ichimoku cloud. It just is. Since I've been trying it, since I got that tip from Isa Trader on stageanalysis.net, I haven't regretted it. It's helped you so much, and it just keeps you in check, make sure that stage 3 is, or stage 1 is as long as possible to thin out the cloud going laterally. And then, when you either bust up to a stage 2 or break down to a stage 4, you don't have the resistance. So this is like, even this type of breakdown here, we could have missed it. And it's okay. You'd have to wait for these candles here to break below, play continuation pattern on the breakdown, and play it that way. One. Yeah, and you would have exited here for a small move. But that's what happens when it breaks down fast. Look, you're out of this stage 2. That's what counts. Don't fall in love with the stock. There's tons and tons and tons of stock. So if this stage 3 just decides to drop and you say, I'm missing out, well, you better put your chances, because it could have easily bounced off the support here in the cloud and went back up. Where are we today? And that's what happens with McKesson for a little while now, and that's why this has come into my radar. We have a super duper nice range right here. So let me put my alert. I know, guys, I go through the chart and I don't talk about the actual move that might happen, but look, this is like educational purposes. I practice it. You should practice it also. It helps me a lot. I know when I get to trade, then it's not like the actual trading, but you've practiced. It's the best you could do right now is just practicing, removing other elements, concentrating on the actual framework. And after that, when you get to the real trading, that leads to framework, you got it down pat. And all you have to deal with is your emotions, the fear, the greed, and all those things that might enter. But the more your theory is good, the more you have chances of resisting urges of doing, of cheating your system there by raising your sell stop closer to have larger position size, to have better risk to reward. You just have to go through this all the time. And I'm just so happy I'm able to do podcasts and put that on video, man. It helps me greatly, and hopefully it could help anybody out there. All right, so here it is. 30-week moving average is super flat, and you see sometimes you have the red cloud, now the green, and the price action is really close to a breakdown right now, and there's nothing underneath. There's no support. We're down through it. Could somebody made a case that this was the breakdown here? Well, maybe, but I see that there's support here. There's still this line at 135, and if it breaks down, for me, that's gonna be a stage 4, a good one. Hopefully, get some volume right here, and I get the RSI to go down in from halfway point to negative territory for an A++ setup. Or the other case is a bullish breakout or a upwards breakout, but we're not there yet. So we'll wait for the either alert right there. They're free, the alerts. I put tuck. I put alerts like a machine gun, man. And just get back to the chart and see what candles added and what morphed. And maybe, hopefully, I see maybe the chart a different way and I misread it. And just check the behavior of the chart. Observation, guys, that's how you learn. Scientists do it all the time. Traders should do it. Observe. And over time, observe some more. All right. That's it, guys. That was a long one. Stage 3 for McKesson. Going to stage 4? Maybe. All right. Ciao.